Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from our friend and colleague, Erik Wetterling. Erik is the Hedgeless Horseman and runs the hedgelesshorseman.com. And it's always great having you on the show, Erik, to get a deep dive into the resource investing sector. And last week, you were at a conference in Sweden in your own backyard. This is the Nordic Funds and Mines Conference, and it was on October 8th through 9th. It was kind of the who's who of a lot of the European funds. There was a lot of investors from the US and Canada also there. There was a lot of companies presenting that are household names and probably some new companies, smaller juniors. But it was supposed to be one of the larger conferences that have been held in Stockholm, Sweden. This is a reoccurring conference, but I think it was a bigger one than the last couple of years. And rightly so, with all the positive developments in the gold, silver, and copper space. I guess just as a starting point, what were your main takeaways from the conference as far as sentiment from other investors, as far as the mood, or as far as things that were trending at the conference?
Well, absolutely. I would say that the mood was kind of like Beaver Creek. People were having fun again. Sure, I mean there's stories out there who have not been having fun. Sometimes it's for geopolitical or political reasons, etc. But there's an appetite for investing in juniors, and of course the ones who actually attend those conferences, they will for sure have an appetite. And I like this event a lot. I mean, I like the last one a lot. For me, it's the most comfortable conference because I don't live too far off from it. And but I spoke to people and they thought this one was even better. It was at another hotel and it was very a bit like I guess Deutsche Goldmesse, where you have most of the people they're staying in the very hotel that the conference is, and also with the John Fennick conferences, for example. So I really like those kind of events. They get very intense in a sense because you're surrounded by people all the time. You'll run into people everywhere, and there were one-on-one meetings. I had pretty much back-to-back one-on-one meetings, so I didn't have much time to mingle, but I got a lot of stuff done. And obviously, since it's in the central Stockholm, it's close to restaurants and bars and central station, etc. So yeah, the ones I talked to, they like this, and the ones who actually were to the previous one like this even more. So I'm hoping this is going to become a tradition because actually when it was over, I felt like, hey, another day wouldn't be too bad. So I kind of got an appetite for it, even though when you're up in it, it's quite intense.
Well, now, were there any, obviously, gold and silver are doing so well price wise? I would imagine a lot of the companies there are precious metals focused. Were there any other metals focused there besides gold and silver that you noticed trending at the conference?
Not that I noticed trending, but there were other metals. I mean, I met with some copper companies, some uranium companies. I didn't have any meetings with any rare earth companies, if I'm not mistaken, because that's not really been my focus. I barely know what questions to ask. So that's with outside my circle of competence, but I'm pretty sure there were some there who were into that. So it was not just a gold and silver conference. It was a bit of everything, but yeah. So I think it was a nice mix, and of course, I mean, which is not uncommon, I guess. There's going to be mostly good cases because they've been vetted, and some investor who's in them, let's say, thinks they should go to this conference. And yeah, and if they get in, I mean, there's at least some good reason for it, I think, because as far as I understand, it was overbooked in terms of more companies wanting to come than could get in. So you have to kind of filter it. And yeah, I had some stores that I kind of knew about already, but I had meetings with. I mean, to me, it's like almost anything in commodities look kind of cheap, especially within my circle of competence. That are not just going up for, because they're whatever flavor of the month. So, I mean, companies like America's Gold and Silver kind of was surprising. I owned it way back when, but then I mean, this was years ago, and then something I think went wrong, or maybe it underperformed, or for some reason I sold it, and then it's, back at, I think they're up at 1.5 billion market cap or something, and you look at it, it's like, okay, I missed a 700% here from the bottom, or maybe more than that. How much more can there be left? But then you actually take a meeting and they explain it, and you walk away from the meeting thinking it's like, okay, I understand why it's gone up quite a bit. And sure, I would, wanted to have bought it cheaper. But of course, back then nobody knew about, where silver price is going to go and stuff. So there's a lot of things. I mean, a lot of returns you're simply going to miss because you don't have a crystal ball. And as long as there might be some upside, I don't really care if I'm getting in quote late, because at least I'm probably taking less risk than the let's say early birds. But yeah, so and I have no real problem buying in after other people when some are telling me how much they're up on a stock. Again, that doesn't really matter to me, because I see that all the time, and usually it might even be. I'm not saying this is one of those cases, but sometimes somebody brags that I'm up this much in that stock, and I look at it, how it looked back then, and maybe probably wouldn't have touched it back then because the risks were so high, but I'm happy to get in now. So yeah, that was one of those where it's like, okay, it's up for a reason, but it looks like a good reasons that they're ramping up, and they have that antimony kicker, which is obviously very hot now. I believe they're the only antimony producer. I got to do some more work into that, but that was one of the ones where it's like it surprised me because I didn't think I was maybe gonna necessarily, let's say, leave the meeting thinking there's more upside here. Yeah, so I mean, they're looking to expand production at their Galena complex, very high grade silver in the US, quite timely, and a good team behind it. And they have like credits, or they have other metals, including copper, antimony, and gold, for example, which I believe antimony they get punished for by the smelter, and didn't get anything, I don't think, for the copper and gold. So I mean that they're about to ramp up production while redoing basically their costs or their revenue. So it's going to take down the cost for their silver production. So it's a one-two punch basically. It's that looks very interesting.
Yeah, so this is an interesting point. We were talking off mic a little bit about when you see a stock that's already run because it's had catalysts, but sometimes even after running, because of the future of what the company is projecting, it could still be at a better valuation now than it was even before. Now, in a company like this that's really run a lot, it's hard to see that when you look at the chart. But, I met with them as well in Beaver Creek, Eric, and when I sat down with the company, and I've been following this company for about a decade, so I've been kind of following the news, but even I was surprised by their growth profile they have on tap. And I think a big change happened last year when Paul Hewitt came in. People may remember him from Karora Resources and from Klondex. And when he came in, they restructured the deal with Erik Sprott so that they now had 100% of Galena, where before they only had 60% of it. And they brought in all this capital to properly fund the company and put the expansion in. They're redoing the shaft and the hoist, and they're fixing that's going to change their productivity and lower their cost. And so they're going to be dropping their ASIC. But I think they're going to do something like going from 2 million ounce a year of silver production up to 5 million ounces a year of silver production just out of Galena. And then in Mexico, they've got this whole new zone down at the Cosala operations that they're increasing. So the fact that they're also have been getting penalized for gold, antimony, and copper, and now they're going to get paid with a new offtake agreement. There's all this upside. So it's interesting for me to hear you talk about it because you don't usually look at producers, and once the stock has run that much, usually you're trying to get in early with the catalyst in front of you. But when you see a stock like America's Gold and Silver that has all these catalysts on tap, would you even entertain the idea of getting in now, like you say, after it's run a lot, but maybe there's still a 3x or 4x move in the stock in front of you?
Yeah, I mean, it's like we've been discussing over the last 6 months. I think that I used to focus on exploration, because there were not necessarily, the metal prices haven't been this high in a long time. I mean, most of the last 10 years they were, had rallies and all that, but it's never like the producers were making that amount of cash. So, I mean, you used to maybe seeing $200 margin for a gold producer or up to $500, but now it's, about 2,000, and even the silver price is basically at all-time high. So all of a sudden, the the producers are making a lot of money, and most of the time the second stage of the Lassonde curve or second part of the Lassonde curve, I mean, that is considered to bring alpha because you have to, wait for something to go into production, and just by waiting, you get a, let's say, a patience arbitrage, so you get paid for that. But still, or last decades, I mean, what's the end of the second part of the Lassonde curve? They were still most mines would still just be making a few $100, gold mines, for example, per ounce. But now it's, above $2,000 if you actually get there. So I think the market is impatient as always. So usually, well, I should say, if it was worth playing the second part of the Lassonde curve when gold margins perhaps were like $300, now it's $2,500. And I don't think the market is really has woken up to that fact, because you still hear people say, well, an ounce in the ground should be trading at whatever, 100, $200, depending if it's reserves or M&I, et cetera, et cetera. But it's like, yeah, but if you're going into, 2 years from now, you're going into production or you're ramping production, and at these metal prices, a gold ounce is going to be worth $2,000 coming out of the ground. It's like you probably should adjust what price you should pay for an ounce in the ground that's probably going to come out of the ground, especially in this cycle.
Well, I think that's going to be interesting to see how the whole sector keeps re-rating, but also how ounces in the ground start getting a value outside of the common belief that it should be worth 100 to $200 an ounce. I think that's arbitrary that companies are valued that way. When you look at what the margins are that producers are making, those development projects, if they're making a $1,500 to $2,000 an ounce in margin just to produce, surely the projects that are making, I've been calling it the next batch of cookies to put in the oven, the next batch of mines that are lining up with these development projects, surely they should be worth somewhere between where they're at now and where the margins are. Maybe not full value, but there's a big delta between $100 an ounce and $2,000 an ounce. So hopefully we see some valuations creep up higher. Were there any development stage companies that caught your attention at the conference?
Yeah, other than that, I mean, it would be one that's interesting in a commodity that I know something about is silver tiger metals. I looked into them some time ago, maybe a year ago or something. But I never had a Zoom call with the management team, or a meeting that I can remember at least. But I had one meeting with them now, and they're interesting, because their stock price is up, but it's not up like some, let's say, silver developers. And I guess one of the reasons is that, hey, their first part of their project in Mexico would be an open pit mine. And obviously, open pit in Mexico has not really been buzzwords in a positive sense, at least, for quite some time. So I'm guessing that's been holding it back because, I mean, it makes kind of sense that if you have a deposit that you want to mine and the gold and silver is there, but you're not allowed to mine it, I mean, how much should that be worth? And it's kind of in this case, well, it's holding off the, let's say, underground development, for example. So it's like the first domino in the development sequence. So now it seems that, yes, that's the one thing that's keeping the stock down, or, holding the company back, needing those open pit permits. But if I look at it, assuming that, yeah, they're, probably gonna get a permit for the open pit, then that will unlock later on the underground development. And then they also, I'm happy to say, it seems that they have a lot of exploration potential. And I mean, at these prices, I believe the NPV of just the open pit has a higher NPV than the current market cap, and it's pretty low capex build, and they seem to have a good team that have built mines before. So, I mean, at face value, it looks like if you think there's a pretty good chance they're going to get the open pit projects, then you're basically getting all the underground development, the underground deposit for free, and all the exploration potential for free. So, I mean, if you get that much free optionality, or likely to get that amount of free optionality, it sure doesn't look expensive.
Yeah, I think it's an interesting play. We've had the company on the show, as listeners here will know, quite a few times, and it's a company I've been following for years, but this is the most they've had going on. As they're still stalled waiting for that open pit permit, they've got the underground PEA that's coming out imminently. They've already got the PFS on the open pit, but now they're starting to explore all the north and south of El Tigre, and they believe they could have multiple El Tigres because there's all kinds of historic mines that they've been holding off on even communicating to the market about because they wanted to keep the focus on their primary El Tigre project. But, the geologist, I've talked with Dave Duncan there before, and he says that we could have two or three of these things peppered along this trend, or a lot of mines that maybe aren't as big but still significant that could all feed into a hub and spoke process and strategy for the company. So pretty interesting to see a developer that's now back to drilling again and doing blue sky drilling. Do you like that when you see a development stage company that has sunk cost already and all the ounces defined with a deposit, but then they're back out to aggressively drilling the blue sky side of it? Is that something that floats your boat as that exploration sizzle along with the ounces in the ground?
Yeah, absolutely. I mean, because it's like what Pierre Lassonde says, give me free optionality and I'll make you a millionaire. I mean, if you're not paying for it, the fact you're not really taking any risk on it, so it means that it's kind of one-sided from an exploration perspective. That, I mean, if they find nothing else than what they have at this price, it looks like you bought what they already have, the bird in the hand, for a bargain price. And then everything beyond that is just risk-free upside in a sense. So, I mean, I obviously, I mean, if you can buy something for 50% of what it's worth, I mean, that's great. If you can buy something for 50% of what's already there, and there's probably, 50% more in the ground, and then there's potential for 200%, for example. I mean, it's just different degrees of wins in a sense. You're never going to go bust by that. I mean, if you had 20 such stories, they found absolutely nothing, but you were right on what they already have, then you on average make money on all of them. And then maybe one in three actually hit some kind of blue sky potential thing, which is just going to use the portfolio. So, I mean, in some cases, when they don't hit anything, it's going to look like, nothing happened. It was no difference than a case that didn't really have exploration potential. But in the cases that actually work out in terms of exploration, you're going to get a boost from that. And again, without taking real the risk. So that's what I love about this sector right now, especially these development plays, basically, where I'm not used to seeing, multi-bagger potential just from birds in the hand. I mean, you used to need to go to the exploration side of things, take high risk to get the potential multi-bagger in 2-3 years. But now some of these development plays are still so cheap, I think, that you might get a multi-bagger just from executing on the birds they already have, and then you get just free sizzle, which is even more exploration upside. And sure, I mean, they're highly valued, so it's not like, I mean, if Silver Tiger makes a discovery, it's probably not going to go up, 200% in a week, which a real small grassroots junior with no birds in the hand might do. But as we know, most of them are also going to fail. So you're going